We saw about a 10% increase over the first half of the year, and one of the things that I was expecting, because the academic literature is pretty clear on this, is a lot of times as you get closer to an election, firms tend to hold off on capital spending just to wait and see what happens, especially big ticket items that last for many years. But we didn't see that in the source data. If you go to the advanced durables release, which you guys cover every day it comes out, and talk to Leisman about it, we had third quarter capital spending between 7 and 10% up, and in fact it was about flat in the data. And so we're a little bit puzzled, and I look forward to seeing the revisions.
The rest of the report was, we'd kill for 3.5% every quarter.
Yeah, we'll take it, yeah.
Are we near the beginning or the end of this new environment we find ourselves in? I think that's everybody's worry, is that, you look at the stock market, it's a discounting mechanism. It's not down that much. Only the NASDAQ is in correction territory. But are we towards the end of the 3% plus GDP prints, or
no? Here's Joe, the way I think about it, and let's first assume, suppose that in the third quarter that we got the 7 to 10% capital spending, which is in the source data. Okay, then what we'd be saying is that we're definitely in the beginning of this, because we have all this capital spending, and when they turn the lights on in those new factories, we're going to get output, and so we're definitely going to get sustained growth out of the GDP that we're seeing. Now, the thing that I think has people a little puzzled is that even though the capital spending source data were strong, the GDP numbers weren't. And if GDP did start to be driven by consumption, then that is something that's less durable.
Kevin, it's Jason Chenard from Strategas.
Hey, Jason.
How are you, sir?
Okay, good morning.
Do you take any, the title of this segment is Trumponomics. Do you take any solace, or do you see anything in the idea that other countries around the world seem to be adopting some of the president's economic policies, to the extent to which it looks like the U.S. is trying to abandon monetary policy, the sole engine of economic growth, focusing more on fiscal and regulatory policy, and it seems like that's being exported. Do you guys see that, or is there any
It's a really good
coordination?
point. Sure, it's a really good point, and I think you could even go back to very early communications from before I ever came into the White House, of central bankers around the world. They were basically saying, look, folks, we need the fiscal side to start to stimulate, because monetary policy has done about all it can. And it took a while, but here we are. We've had tax cuts and we've deregulated, and it's really had the positive impact on the economy that Joe and I were talking about last fall. And I forget who was, maybe Austin was disagreeing with us, but the fact is that we've got that growth now, and then the question is, can we sustain it? And I believe that we can. And one of the things that's a positive to the outlook is that as other people cut their taxes and push deregulation even more, given our evidence, then that'll increase the demand for our exports.
Hey, Kevin, where are we in the interest rate environment right now? Are we a long way from neutral? Are we getting there? Was Powell right that we've got a long way to go? You're from AEI, but you work for the president. Is the president right that
yeah, since I work for the president, I'm supposed to respect it, and I do, the independence of the Fed, and so I can't give them advice about interest rates. But as an economist, I can just say that when you have a lot higher economic growth, those natural rate of interest models tend to give you higher interest rates as well. But where it all ends up, that's up to the Fed. We picked some really great independent-minded people for the Fed, and it's not my job to give them advice.
Okay, but
sorry.
how about the tariffs? Once again, you're an AEI guy. They're anathema to you guys at AEI, and everybody said we don't like them, but we're patient. We'd like to see something good come from them, but we're not going to, give our blessing on these things forever. Are we past the point of where you're giving your blessing? Do we need to start reining it in a little for China, or do we go full bore?
I think the watching the president act and talking to him, one of the things I've noticed is I've really taken kind of a graduate class in the art of the deal. So if you look at it, we've got a great free trade deal with Mexico and Canada. We've started the notice period for free trade with Japan and with Europe. We've closed a free trade deal with Korea, and they're all much better deals, the kind of deals that people would be dancing the jig over at AEI about. And the nub is, and it goes back to your discussion with Ginny Rometty just the previous segment, is what's going to happen to China. And we're very hopeful that China will fall in line with all the other countries, and that's why we're looking forward to hopefully a meeting at the G20 between the two presidents.